First rates will just start coming up on your screen. It's Thursday, it's been a truncated week, so F&O expiry pressure would actually be concentrated today. The breadth is dented. Hardly any green on the screen. Tech Mahindra down, Mahindra & Mahindra down, Infosys down, Adani down, Bajaj Finserv down. Hardly any green on the screen. Look at two newsmakers actually, or I would say three. Cipla, then Jubilant Foodworks, and then third is actually Tech Mahindra. These are three stocks which are worth revisiting. Jubilant Foodworks down 20 rupees, Tech Mahindra down 35 rupees, and then you've got the price action which now let's look at some of the global denominated sectors, especially metals. They've started falling, and they've started falling on strong volumes. Similarly, consumer tech and fintech, Zomato, Paytm, they have also started reversing. So it's a sea of red. And I hate to use the term, but everybody is running for cover in the mid and the small cap space, and suddenly there is no space to hide.
Yeah, absolutely. That seems to be the case. It's all falling down. Let's hope the selling actually abates after the wave today, and we're exactly in line with what the Nifty implied open was this morning. It is a 0.5% cut, and doesn't seem like it's going to get better anytime soon, at least. A lot of other earnings, Nikun just flagged off Axis Bank, wherein the NIMs have actually improved 4.25%. Deposits have seen an uptick of about 18%. Axis starts off in the green, 1% higher there. Good numbers for Chennai Petro as well. The margins have expanded all the way to 10.9%. Revenue uptick of 12.25%. Although the stock has started off soft in a trade today. Chalet Hotels, the revenue has seen an uptick of 27%. EBITDA is up 48%, 1.25% higher for Chalet Hotels. Sona BLW has come out with excellent set of numbers. Margins uptick of 300 basis points, revenue growth of over 20%, 2.6% higher for Sona Comstar as we speak right now. CMS Info, that also came out with its numbers. The revenue has seen an uptick of nearly about 15.5%. Marginal uptick in margins. Actually, no, margins have fallen on a year-on-year basis. On a sequential basis, it's a bit of an improvement. JSW Infra, and it seems that reports are doing the rounds that the company is in talks to buy SP Group's Gopalpur ports for 3,000 crore rupees. JSW Infra marginally higher as we speak right now. And Sonata Software also came out with its numbers, as did Rallis India. So these are a bunch of other stocks which are in focus. Not a great quarter for Tech Mahindra, not a great quarter for Jubilant Foodworks, or for that matter even Indus Towers, wherein the revenue has seen an uptick of less than 1%. And margins have seen a decline on a sequential basis. So that's really the weak setting right now in trade as we speak.
Oh, yes, indeed. And that breadth really telling the story. The fact that it's skewed firmly in favor of the losing side. No surprises then to see that, we were talking about that 5-day decline for the broader markets. Take a look at it today. No different. The fact that there's that stark underperformance as well. Already 1.5% being shaved off. The key pain points being real estate. You've also got metals, media, PSU banks, and Aisha, like you said, pretty much everything in the red this morning. Just going to highlight some of the other big drags in today's trading session. MMTC, Varun Beverages, Ircon International, Rail Vikas Nigam, Jubilant Food, of course, Kaplan Point, Jindal Saw. Those are under pressure. On the flip side, though, take a look at what's lighting up the screen. Chalet Hotels, Axis Bank, Sonata Software, IndusInd Bank at about 14.22. You've also got something like a Gulf Oil, which is up in trade today. So that pretty much sums up the market setup this morning, and on the brink of actually breaking 19,000 on the downside and just about clinging on to that level by the skin of our teeth. Good time then to bring on board Prateek Agarwal. He is Executive Director, Business Investment at Motilal Oswal Asset Management. Prateek, thanks so much for taking time out and joining in. We've been taking stock of all that's happening across the globe of late, and given that it's a bit of a shaky setup, nothing alarming, and now we're on the brink of breaching 19,000 on the downside, is this a start of what could be a deep correction or just sort of a pause button?
No, I would take it as a correction that happens once in a while. Probably an opportunity to buy, given that overall growth outlook remains good and strong. So that would be my initial thoughts.
Why do you think this is not going to be a prolonged correction? Because valuations aren't exactly attractive. Global cues are slightly sticky, macros are not that supportive. So the ingredients in the melting pot actually are favoring a downside rather than the upside.
Uh, so if you look at the ingredients, global, yes, is an issue, but that volatility comes to India, to my mind, if our forex start to drop. Now, given the comfortable position on the forex, I think our central bank has a lot of elbow room to keep policy growth oriented in the country. So if forex starts to drop, then I think that elbow room will reduce, and we would also have to keep rates higher for longer, maybe make them even higher than what they are today. Else we are fine. Second, if you look at our linkages with the world, look at how much we export, 18% of GDP, 1% drop in global growth impacts our growth by 18 bips. Given that this is an election year where spending is higher, generally speaking, that is what we need to make up in combination of more of personal spends and capex, which I think is doable. So, to look at globe and paint a pessimistic picture on India is not correct. While yes, sentiment-wise, we should also get hurt. That part taken, and hence I am saying the downtick should be taken as a opportunity. Yeah, our construct of valuation is 18 and a half time 1 year forward earnings. Now, even before this quarter and a week back, when we checked 25 earnings, most people had, 1090 to 1100 kind of EPS on the Nifty, which gives you 20,300 kind of target for Nifty end of the year. We were there, we came back, we could be there again. So I think very, very defensible levels on the larger cap indices.
Pratik, so as a portfolio strategy, what is it that you should be doing right now? Because, a typical churn and weakness in the market. I mean, right now we've even reached 19K on Nifty. So it's a good over 1,000 points actually from the top, right? And that bounds to shake off weak hands out of the market. But as a portfolio strategy, what is it that you should be doing? Get away from the losers, book partial profits, already start buying? And if so, buy what? Buy more of the same? Or do you think when the market begins its recovery, there will be a newer set of winners in the market this time?
So if you think that this is a correction on the way, then the same set of winners should continue. We think it is that way. We are high quality growth investors, so the themes like banks focused on retail continues. We are hardly there in large cap IT. I think that's a space to not be there. We are there in new tech. I think that space continues to show strong growth. Engineering, again, engineering, defense, chemicals are spaces where growth momentum in terms of volumes should continue to be strong as we go forward. So I see more this as yet more as a hiccup on the way, which will keep happening in the market. One should always expect it to happen, and hence I think the same space will come back again.
When you say same space, are we talking about defense, railways, power?
All of those themes, whichever ones. So there were some fluff definitely built up in certain spaces, more on stories, the farther off earnings growth lied, the more difficult it would be for those spaces to come back. But where earnings growth is strong and continuous, I think those spaces one should expect to come back reasonably quickly.
What's been your portfolio strategy of late? I mean, financials is part of everyone's portfolio. How are you dealing with that?
We are underweight financials as a house. We are underweight tech as a house. So two large spaces in the index, we are meaningfully underweight actually. taking money from there to invest into other growth themes, which, since they are newer, are less there in the index. So themes like luxury consumption, themes like hospitals, engineering, defense, chemicals kind of stuff, less there in the index. So which is how we are positioned.
Yeah.
If you don't underweight banks, if you underweight IT, that's about 45%. So what do you own? I mean, where are you overweight then?
No, so it's not that we are zero there, but say 10-15% of money is taken from there to invest into the other spaces that I spoke about.
Sure. Interesting. So, give us some color on where is it that you are underweight within financials as a pack, and what is it that you still have in your portfolios?
No, so larger cap banks, we are generally underweight, don't see valuation upsides there. The transitioning from one regime to the other is something that will take time, and I think we should give that space, that time. Something similar happening in some of the larger NBFCs, so we are not there as well. Versus that, we are there in insurance, life to some extent, health in a bigger extent, and that's been a big reason for alpha for us. We are there in luxury consumption, so premium end builders, jewelry guys. So those kind of stuff, I think there the growth outlook remains good. And yes, engineering, all of the themes that you spoke of, defense, railways, etc. We are either invested into companies which are directly exposed to those themes, or through cable companies which will benefit one way or the other from the underlying.
Okay. Now, I'm going to take the clock back and talk about some of the core positionings of Motilal Oswal AMC. They were centered around autos. They were centered around names like Eicher, Page Industries, HDFC Life, HDFC Bank. But there seems to be departure there. Whatever information which we have in the public domain. Why such a big departure? Because if the QGLP framework was at play that time, how come that framework is played differently right now?
No, so one can have either a Q part which is very high up. So what high Q will do is to have a lot of free cash in the immediate term, and that can result in some upside, or you can have a very high growth quotient. So the change that you are seeing is something that we captured in our November communique. We said the high quality part, the highest quality part of the market is just too expensive. We are not there, and that's the change that you are seeing. We are in decent, much better than average, but not the highest quality part. But very high growth part of the market. So we believe we are running some of the highest growth in EPS portfolios in the country today.
Great
And
to
that
then.
is the place where we believe some alpha lies.
Okay, great to have you then on the show today. Thank you so much for taking the time out, Prateek.
Thanks. Bye.
Let me now welcome on board Gautam Shah as well, joining in on the show, and let's read in on the charts. Gautam, hi, morning. Not really turning out to be the best of morning though. We've just breached 19K. What's in store for us next? Where do we find the next support?
Good morning, Aisha. Yes, I think we've breached 19K, but I think the writing has been on the wall for the last 3 or 4 weeks, at least from a Goldilocks point of view. I think even when I was on your channel the last time, we did allude to the fact that the market was looking very toppish at high levels. We've had enough ingredients of an indication of a possible market top at the recent high, and that seems to have played out really well. The global factors have obviously not helped. The local election jitters seems to be getting discounted by the markets. And we have been working with a target of about 18,900. We are at the doors of it. This is an important support. The market could see a bit of a bounce from here, but I don't think we are out of the woods as yet. There is clearly a lot more downside. There is going to be a lot more price correction and time correction, and the markets are not going to turn around in a hurry, something that we've got used to in the last 6 to 8 months. So if and when 18,900 were to break, I think another 400-500 points downside towards 18,400-500 is quite likely, and one should not indulge in bottom fishing even now. I think there is just too much leadership coming on the downside from many stocks and many sectors, something that we've not seen in a long time. And the point which I made earlier, when two big heavyweight stocks like HDFC Bank and Reliance do not perform and actually underperform, the market will always remain under pressure. And to add to all of this, I think mid caps and small caps, given the kind of rally that they saw in the last 4 or 5 months, almost vertical and parabolic in nature, there is clearly a lot more room for downside there as well.
Gautam, I have lots of follow-up questions. First things first, how much more downside?
I'm very clear about the trajectory. When you have strong downtrends, you really do not know the magnitude, or it's too amateurish to even call the magnitude of the downside. I think in terms of working numbers, we actually put it out in our big picture report at the starting of the month that 18,400-500 is the number where we are looking at serious support coming in. Not to say that it will be the worst case. I think the chances of even this number going eventually is pretty high, but we will review around that point. But I think having said that, I think this is the time to be conservative. This is the time to be cautious. This is the time to be in the top 100, to be in top quality, because I think not just India, I think global markets are under pressure. I mean, look at the Russell 2000 in the US. It's near a 52-week low. People talk about the Dow, people talk about the Nasdaq, the S&P 500. Those indices might not be as relevant in the Russell 2000. Look at some of the Asian markets, the kind of breakdowns that we've seen. Look at the way some of the European markets have behaved in the last 1 month. So it looks like a global scenario right now. And unfortunately, given all the geopolitical developments, it's only fair that the markets react this way.
Okay, fair enough. Given that you're saying that, Gautam, let's talk about individual sectors then. Given all that's transpired within the banking space, what's your outlook as to the pecking order now within the entire banking space and the important levels that you'll be tracking on the Nifty Bank itself? Will it be pretty much neck to neck with the Nifty?
Bank Nifty has taken leadership on the downside. I think it's pretty clear. And unfortunately, there is no pecking order because just about everything in the banks are looking weak, whether it's the private banks or the PSU banks. And the Bank Nifty has a lot more room on the downside. In fact, we would not be surprised to see a test of 41,500 in the near term and possibly 40,000 and below, over the next a few weeks. So banks are really the problem. In the good times, they underperformed. They did not move hand in hand with the Nifty or the overall market. And now in the difficult times, they are leading the market down. And the problem is these are heavyweight names. Even if they fall 3, 4, 5%, it can have a very large impact on the entire market. So unfortunately, no signs of bottoming out. In fact, the Bank Nifty chart, even at current levels, is quite negative. So I would just completely stay away from the entire pack and move to the defensives. We like pharma, we like IT to a certain extent, we like gold and silver, which has been our contrarian bullish view for a long time. Everything else more or less looks like it's going to see a lot more downside.
So Gautam, when the downside gets arrested, today, tomorrow, this month, next month, it'll get arrested. Do you think the market leadership will also change? Because post-shakeout, the leadership has always changed in the past.
I think that's what has been engraved into us, that every time the market will see a correction, it will quickly turn around or it will quickly get arrested. What if this is a slightly longish correction, given all the geopolitical developments that we are going through, and the fact that you have assembly elections coming up, and the fact that you have a general election coming up, which will be fiercely fought? Given all of these factors, there is a very high probability that the market actually does not make a new high for a long period of time. So in that kind of an environment, I'm sure a lot of market participants are going to be uncomfortable because they are used to seeing the Nifty going through a correction and coming back immediately, and all is well very quickly. This time, it does not seem, looking at the weekly and the monthly charts of the market, that it will happen in a hurry. Not to say that the market will fall very big, because there is still 16,000 crores of SIP money coming in every month, which will get deployed and which is a structural reform, if I may use that word, that's happened over the last 3 years. So that will probably protect our market. But given the global scheme of things and given the global charts, it seems that the market will not get arrested in terms of this downtrend very quickly.
Gautam, two stocks that you highlighted, Reliance and HDFC Bank, without which the index can't do anything. Fortunately, that's not been the case in the run up to 20K because these stocks continue to lag and the index has done whatever it has. Having said that, on the way up, the stocks not performing is not really going to help the index. But tell me, what's your reading on Reliance and HDFC Bank? Will they continue to underperform?
I think they will continue to underperform. And as I mentioned last time during our interaction as well, the best way to understand them is not in absolute terms, but in relative terms. So if you actually divide a HDFC Bank by the Nifty or divide a Reliance by the Nifty, you get something called a ratio chart. And that ratio chart has been downward sloping for weeks and months and quarters, in fact. So given that environment, I don't think a turnaround is happening anytime soon. And interestingly, a stock like HDFC Bank, which is heavily over-owned and is being talked of as the next big 5-year, 10-year story for whatever reasons fundamentally, which I'm sure is justifiable. But from a price action perspective, it does seem that this underperformance, which has been on for the last 18 months, is here to stay. Because still the markets don't bottom out. I don't think these stocks are going to take leadership anytime soon. So there could be easily 10% downside in both of these stocks from current levels, maybe 15% on the outer side. And if that were to play out, it's not going to help the Nifty at all.
Gautam, so the first rule of technicals is you should always sell the weakness and you should stay with the strength. So when you say markets are looking bad, is it time to sell the weakness? Is it time to go short?
Nikush, to be honest, it's been time to go short for the last 3 weeks because we've already seen a 1,200 point fall, in the last 3-4 weeks. We are at the doors of that important support of 18,900, which is where the 200-day exponential moving average is as well. And there is a bit of a mini panic, or I would say a selling climax, given the fall below 19,000 today. So I think short selling at 18,900 levels might not be the best idea, but in a downtrend, you sell the rally. So there will be pullbacks from time to time. You will get those 200, 300, 400 points, recoveries from time to time. Sell them because I think the market has created a very solid ceiling at levels of 19,400, 450. Until that does not get violated, I think 18,400, 500 is coming after maybe a pullback from 18,900.
Your view is very clear. I mean, this is your view that for the year we've picked out.
Year and maybe more.
Okay. What could be the out of jail card for the bulls? You remember that monopoly term, out of jail?
I would love to use that card, but given what I'm seeing on the geopolitical front, I keep saying this as a global citizen, I'm extremely concerned. And as a financial analyst, I'm equally concerned looking at the fact that the equity markets or financial markets in general have started to discount the same. Look at what gold has done. It is at the doors of 2000. Look at what Bitcoin has done in the last 2 weeks. It is an indication that the market, financial markets, are worried about the geopolitical situation. And it's only in the last 2 weeks that equity markets have, aligned to that. So what could be the out of jail card for the markets if this geopolitical situation stabilizes? At some point of time, out of magic, I really hope it happens. I think that will probably be the best thing. But having said that, I think this assembly elections will be an equal bigger problem because I speak to a lot of large HNIs and corporates, and I think people are a little concerned about the assembly election results. So people want to go a little light. So I don't think smart money is going to come big into the markets till those results are not out.
Good to get your take really on the lay of the land, really, in terms of where you see the markets headed, as well as some of those key events. So a fairly cautious stance, more downside towards 18,400 to 500. Gautam, good to have you on board. Thanks so much for joining in on the show. Tell you what, we'll come right back. We'll slip into a very quick break with news that the markets are down and out in trade. 18,947. The broader markets down nearly 2% apiece. Thanks for staying on with us. Still tune into First Trades. And as promised, you've got market veteran Samir Arora, who shares some tips to beat the market, themes that he believes will benefit in the long run. Along with Dinshaw Irani, let's listen in to this special.
चलो जी खाना आ गया नो शेयरिंग Normally I would have had 2 gulab jamun. Now you force me.
चार तो टोटल है तो आपके 2 इनके मेरे को क्या मिलेगा?
You bad reputation party.
Oh no. I love that. तो आप थोड़ा मैजिक ट्रिक करते हैं गुलाब जामुन याद करो
Attempt is always to, for any active fund manager, the attempt is always to do better than the index.
But for you to achieve that, would you be taking higher risk?
No. Why? We have to basically sort the universe into stocks which are good or bad and eliminate the bad, which is why we call it elimination investing. Whether it pays off or not is something that you cannot promise because you yourself don't know. But historically, that has worked.
So, can I attempt something
Yes.
here? So, Nikunj, if you see the index, whichever index you take up, 1/3 of the stocks do phenomenally well and 1/3 do phenomenally badly. So, our elimination investing process is trying to eliminate those 1/3 phenomenally badly. There will be stocks
Attempt
which
to reduce.
attempt is to reduce those 1/3, the bottom part of the index as such. So, if you avoid those 1/3, then your averages can be better than the index. That's how it is. So
How
that's
will
what
the PMS be different from the mutual fund or vice versa?
Yeah, so the PMS actually takes binary calls on say sectors, right? So if you don't like a sector, it'll be 0 in that. It'll be like 1 or 0 call. But in the mutual fund, since you're doing a daily NAV, you need to be close to the index somewhere. So we'll probably be underweight the sectors, or maybe we'll be absent also, for all you know. Depends on the manager. But the fact is that there'll be some more stocks in the mutual fund than what we are having in the PMS.
By the way, I have personally invested in the NFO, and that's just my respect and my regard for Samir and the years of his investing career. He's an original thinker, and I'm sure that template really would be at play because his ability to identify the next big thing is something I've always vouched for in some of the previous occasions. For example, HDFC Bank 30 years ago.
28.
28, almost
It was not
30.
listed 30 years ago.
28 years ago. You bought into Trent, you bought into a lot of retail
We own
businesses.
5% of Kotak.
Exactly.
5% of the whole bank.
So will it be that Samir Arora style
First
again?
of all,
at
it
play?
is not my style now in the sense now it's become a organization or a firm. But generally the style is not that you have to own 5% of anything, but nowadays the companies have become also so big. And also now new smaller companies don't get listed because of private equity intervention. But broadly the model has worked, as I say again and again, that you first remove the bad, so reduce the probability of making grievous errors and cost of error is low. And then from the stocks that cannot be rejected for any factor, then you choose the good. And the difference between us and others, because nobody will say that they buy bad factors, like bad management or bad history or bad theme, is but I think they do trade off. That means they will accept high valuation by saying it has good management, or they will accept poor quality management by saying it is very cheap and discounted. We have understood that there is no need to make these trade-offs, and that is how the consistency has come. In fact, we are betting on it. If you see our tagline is हर term के लिए. Effectively, we are saying don't buy into this thing, oh, it'll all work out in the long term. We are holding ourselves to this sort of standard or whatever, a goal that her term ke liye, which means every broad, medium term also it should do well. But who knows?
So it's not the classic way when fund managers and mutual fund CEOs, they tell us, think long term, start SIPs, time your goals.
No, we'll say the same thing.
You'll say the same thing.
We say the same thing. We are saying do very long term into the fund. For us to evaluate the long term, we will go through mid-term. And if the mid-term is good, we will hold it for the long term. For example, I have not bought HDFC Bank in those days thinking I am holding a 20-year story, but it continued to do well, so we continue to hold it. Rather than us saying, oh, we don't care what you are doing because we are long-term investors. That's what I was giving that example that Mr. Buffett bought Apple and maybe a year or two before that bought IBM. Now IBM does not exist because after a 2-3 year period, he realized that he should be flexible and move on. That
These
is
are
the
large
model.
positions. We are talking
That is
about
the model.
$10-12 billion, maybe
him.
more for him
him,
to churn actually.
Yeah.
So when the NFO closes and when the real NAV will be discovered, which will be a function of market and that day's fund, what will be the composition of this scheme? How will it look like in terms
the
of stock
sense-
sectors?
So first of all, it's not clear, but we don't know whether they are buying it on day one.
Okay.
There's some 1 month, 60
3
days.
months.
3 months.
3 months
But
you can
generally,
90
our
days.
firm's policy is not to overly time the market. But we will see on 6th or whatever. So your question is which sector, I mean,
How will
what
what
market
would
caps
be the
that
portfolio?
Mr. Rani, portfolio, like, how can we tell you? We don't, I don't think they even know themselves what the portfolio will be.
So the mix will be.
You must have identified
yeah,
winners, right?
Yeah, sure. So basically, how we gone about it is that if you're talking about India in a medium to long term, you're talking about GDP growing, and GDP grows only if consumption kicks in, right? Capex can only take you that much, consumption has to kick in. So obviously, consumption will be one sector which will be a big overweight in our portfolio. Finance, which is banks and NBFCs all put together, even insurance and all, that is a double whammy for them because they don't only fund the consumption, but they also fund the capex needed for that consumption. So obviously, finance will be another big overweight in
So
our
finance
portfolio.
is the main pillar.
Main pillar will
Consumer
be
and finance.
Consumer
Consumer and
finance.
finance.
Those two will be the main pillars. Yeah.
या तो आप नहीं खा रहे हो या मैं ज़्यादा खा रहा हूँ.
नहीं, I'm having.
दाल तो बहुत बढ़िया है, I must say. And
And typically, in the past, we also used to own a lot of IT. So there were 3 pillars. That IT pillar will come back one day, I guess. Currently, we are enjoying the absence of IT in our portfolios.
but in your PMS schemes, you bought into Zomato, you bought into Paytm. In the fund also,
We don't
will
know.
that story hold?
We
true?
don't know.
You don't know. So you would be actually from the house of Helios Asset Management. There could be 2 parallel portfolios now.
We don't know. We can't talk about stocks.
No, I'm just trying to understand the flavor.
Broadly, they should because they are all coming from the same research.
So the conviction level is high.
They should be bought. But I'm saying that there's a little bit of discretion or a lot of discretion with the fund manager. And secondly, at one point the price was 50 when I bought it. Now the price is 100. Now whether I can push it for some time, the new fund manager may say little less, little more. But the basic ideas are coming from the
universe.
Research.
How large is your universe? How large is your research team?
So we have around 8 people in investments. The universe is around 200 odd stocks, and it keeps adding. I mean, adding or deducting depending on how the elimination investing.
No, so
kicks
200
out.
is what we could actually there were 450,
Yeah.
and we eliminated 200 odd that we will never buy them.
No, the investable universe we're talking about, right?
So I'm just saying. So from 400, by using this elimination factors, we eliminated some 200 companies saying we will not buy.
So I like to draw your attention to the launch. It is 6-8 months ahead of the general election. And then before that there is state election cycle.
Correct.
These are binary events, these are swing events.
These are binary events, but at least the central elections or the main elections, we don't think are equal probability binary events. But otherwise they are binary. But the probability of there being a shock may be very less, maybe, I don't know, 10% or I don't know how. But if that came, that would be a big negative, maybe worth 15% on the index, which will then take you a year to recover. But because the probability is not even, that way every event in life there's some probability of things going off or wrong,
If you would have launched this fund in December 2020, in the despair of COVID, that time markets were not cheap, but they were super cheap. It is like saying gold was available at a price of silver. Now, 24 karat gold is available at a price of 22 karat gold.
Maybe.
And in some pockets, gold is trading at a price of diamond.
But actually, if a 24 karat gold is trading at the price of 24 karat gold, that is also okay. In the sense, when people buy, they buy it at the market price and whatever that be.
No, the margin of safety, is it there, right?
The margin of safety is in the fact that the market or the economy or India in the past has been growing at 13-14% rupee term returns. So unless you find specific reasons that because of that something massively wrong has happened on valuations, plus minus the market will do that only, and then we are supposed to do whatever we can. But the idea that you should have bought in 20 or many people say I bought it in COVID, that can't be a model for a fund because those events come every 7-8 years. What do you do for the rest of the years? So broadly, the starting point, if at all, would have helped those people. But what about the people who would have bought 1 year later? It's an ongoing game that equity does better than debt and equity does better than gold. And once in a while it doesn't, but in the long term it again does. And our job is to try and outperform that index.
So Samir, if I look at the market, according to data what we get from brokerages, 90% of the market participants, they have time frame of less than 1 year. 5% is broadly where the time frame is 1 to 3 years, and it's really minuscule. 2 to 3% is where the time frame is 5 years beyond. This fund, do you think will be catering well to somebody who's got 1 to 3 year time frame or 5 year plus?
5 year plus. We are saying that equity markets in the long run do well, but how to do better than that equity market is by you being ready to change if needed or to add if needed. But there is no need when the market is liquid, when the market is visible, that I must today take a 20-year bet. I will take a 3-year bet, and if it is continue to do well, I may add or I may walk away. But since a large number of companies do well in the medium term, but the same companies don't do well again and again, that's why you see in the long term, private sector banks, really only 2 banks have created wealth. HDFC Bank, Kotak Bank.
वो भी underperform कर रहे हैं.
अब वो आजकल, but also over time. But if you had started in 98 or 97, there were at least 5 other banks, Times Bank and पता नहीं कौन, GTB, Global Trust Bank and Centurion Bank, Bank of Punjab, वो तो चलो फिर, Bank of Punjab, all of them went to zero. But on that day, you can't say I'm buying long term this, you're buying it in multiples of 1
You
to
don't
3
see something like this anywhere in the market. If you have to treasure hunt, shake some trees, can you find this kind of a theme which could be a powerful theme in next 5-10 years?
No, it could be, but I'm saying you don't know which of those fellows will be the winner.
Of course.
So
Let's
therefore, the
talk
point.
a theme. See, financials cannot be that theme. It's a discovered theme, right? Consumption, that's the India romance.
ऐसे नहीं होता. If you see, if I broadly define consumption, everything will be consumption. You might say now it's shoes, now running shoes, now it is food delivery. Ultimately, it's all.
Hint to do viewers के लिए.
क्या
That-
किस?
What is that mega trend according to
I will
you?
tell you very simply. In 1 month, our full disclosure of 100% of the portfolio will be there.
Of course.
तो पहले आप फंड में डालेंगे, then only.
और वो 90 days में इन्वेस्ट करोगे ना, 1 महीने में नहीं होगा.
नहीं, हम तो 1-2 महीने में ट्राई करेंगे करने की.
So
We won't wait 90 days.
So then, Shiva, final question. Every investor has an edge. Every AMC also, has an edge. There was a अरे ये आपके मतलब कर रहे. This is that this chocolate and rasgulla. Now there should be no Delhi Bombay here because the sweets में मैं differentiate नहीं
gonna
करता.
split.
As long as it is sweet and it is delicious. So to rephrase that, जब गुलाब जामुन आता है ना, मैं सवाल पूछ रहा था. वो natural है मेरे अंदर. I can still resist dal, but when it comes to sweets,
Very
सवाल ही भूल जाऊँ. सोचने दीजिए. So every AMC would perhaps have an edge. There was a time when information was the edge. There was a time when knowledge became an edge, like Samir Bhai said. There is a time when time and human behavior becomes an edge, where you do what others are not doing, or you end up looking at the same investment not in terms of days or weeks, but in terms of years, so the terminal value changes. What would be the edge of Helios AMC?
So I would say, look at the team. I mean, the team has been working together for 18 years. The top investment team I'm talking about. Okay, so that's one definite edge that nobody has in the industry. That they're working together and then they're coming out with the product. The second edge is obviously the fact that whatever we're going to offer you today, we've been practicing it from 2005 as a team, right? So it's not a back-tested product; it's a time-tested product, and we've seen the results of that. In fact.
It's a rough Thursday, definitely for equity markets. On expiry day, truncated week, 1% lower is where we're currently at. And you know what? We're even in the brink of breaching 18,900 now. So just about defending that level with about a 35 odd point move. 18,935 is where we're currently at on the index. Actually, there's only one winner within the entire F&O and Nifty segment, and that's only Axis Bank, which also is less than 1% higher right now. But all stocks are in the red. Jubilant Foodworks, L&T Finance, Delta Corp, RBL Bank, Manappuram, they've all fallen quite hard. These are some of the biggest losers. From within the large caps and within the Nifty constituents, it's Adani Enterprises down nearly 3.5%. Tech M is reacting to its poor performance, 3% lower there. M&M is down 2.5%. Hindalco is down 2.5%. And then UPL as well is down about 2.5% as we speak nearabouts. But since we are in the thick of earnings, let's discuss another set. We've got Wellspun India in focus. They've actually managed to impress the street. The net profit has come in higher by almost 22.5 times. The EBITDA as well has jumped up 2.8 times. And the margins as well have seen a fair amount of expansion. So let's try and understand the quarter went by and what lies ahead a little bit better. Dipali Goenka, the MD and CEO, joins in on the show right now. Dipali, hi, morning. Good to have you today on ET Now. Dipali, your revenues have risen nearly about 19%. The demand environment clearly is looking favorable right now for home textiles and flooring. But your sales growth guidance, Dipali, at 10 to 12% would seem rather conservative on a base like this. What's driving this caution?
The caution is the global economy and the scenario as you spoke about right now. And, amongst the turmoil and the war as a backdrop, I think that's what is concerning right now. And we feel that despite all this, we'll continue to achieve our commitment of 10 to 12% growth and 15% EBITDA. And I think India is in the right position globally if I look at my core businesses. And of course, the domestic businesses have, we've seen the retail segment be a little slow comparatively in India. But I think, owing to the whole festive season coming up, that also will see a little upside there too. But yes, there is that cautious optimism that will be there in whatever I say and commit.
Absolutely. And one of the key concerns for investors was, in fact, the sluggishness in order inflows, recessionary conditions in key US markets or key markets like US and Europe. But the situation is different now. Tell me, how sustainable do you think the recovery is? Or would you say it's early days yet and you can't really tell how US and Europe are going to pan out?
So let me just first give you a perspective about United States of America. Right now, even when you talk about our quarter, it is also owing to a backdrop for the festive season that's coming in. In their quarter 4, our quarter 3, the Black Fridays and, the Christmas. So I think that's where, the prep happens and hence the order flow is. But if I look at even US, the retail resilience is still holding on in September. So that's what is the positive streak that you see there. However, Europe and UK are slow. And I think, let me just say that they are still struggling. But USA continues to surprise us, honestly.
Good morning. Nikunj also joining in. Now, my understanding of the cycle is that the upside for the Christmas for both US and Europe must have got captured now. So when you're saying slow, are you referring to the Christmas and the New Year season, or are you talking about the next year?
I'm talking about the entire year, Nikunj, and glad to have you and glad to meet you here. But the entire year this year, I will see that, our half fund has continued to grow. And this year, we continue to grow at a rate of around 10 to 12%. But, the season time, retailers stack up inventories for the new season, and hence there's definitely an upside, and they prepare for the holiday season, which they are going to be quite bullish about. And because people are, buying offline now, and that's something the retailers have seen that, people want to have experiences outside. They are, they're shopping outside, and retailers are preparing for that for United States of America, for sure.
Guidance, what you've given, are you also baking in some degree of currency advantage?
So that is there, but it is minimum here, Nikunj. For us, this guidance is pure in the terms of performance, actually. Yeah.
The Biggest moving part for Wellspun, I think, is cotton prices, and they have been notoriously volatile. Given where cotton prices were and where they are right now, how will this change the scenario for you?
Nikunj, now let me give you a perspective about cotton and the MSPs, right? When we see what is an MSP driver and the difference between lint and the seed, right? So we see the oil, the oil seed going down, and we definitely see our MSPs being around 57,558, and that is your base that you see right now happening. And as we go forward, the cotton prices are going to be the same, like 61,000 to 62,000 next year. That's what we are anticipating. And that could be the base that we will start off from. However, I think we learned our lessons very well last year. So we are definitely being very cautiously optimistic about how are we going to be looking at our commodities. And we are absolutely, we have around 4 months of stock. And as we go continuously and the season's opening up, we'll continue to buy. And we are definitely going to be capping our risks on the commodities as well, Nikunj.
You moving into the flooring business, it's a margin, the EBITDA margins for the flooring business are nearly half of that what you have. Don't you think you would be damaging your return on investment by expanding?
I think, Nikunj, let's face it. I mean, we've been talking 2 years now, and flooring business is pretty new. Our emerging businesses, let me tell you one thing, has contributed around 31% to our top line. And our flooring business has grown 52%. It is a huge opportunity for us, not only in India, but as well as exports. I think India is in a right position in the terms of the China Plus One here. And flooring is definitely, getting the tailwind from that side. So yes, right now, as it is growing, the critical thing for us is to focus on the indigenization of the supply chain, which we are doing. So as a result of that, as we go forward, our margins will definitely improve as well. And as the top line increases as well, and I think we have seen that upside of 52% growth. And I mean, our exports have had a growth of around 82% in flooring itself.
Avan as well joining in. Just give me a second as we quickly mark a listing, and that's IRM Energy. It has listed at close to a 6% discount to the issue price. Those are some visuals as well. Remember, it's Kerala Pharmaceuticals backed company, and you have the company which sold a total of about 1.08 crore shares in its overall IPO, with plans to raise close to 545 crore rupees. So it's a tempered listing there for IRM Energy, a city gas distribution player. Dipali, apologies for that. To get right back to our discussion, and what's your outlook when it comes to the net debt? Because that on a sequential basis has reduced. Are you confident of bringing your net debt below 1,000 crores by the end of FY24?
Absolutely. And I think that's the goal that we have. And that's my personal, lookout. We definitely will have that. Can you hear me? I think I see it freezing.
We can hear you loud and clear.
Our net debt below 1,000 is what we are looking at. And any other investments also we will do going forward, will be with the prudence of the ROC and IRR. So yes, that's absolutely very, very clear, because I'm very clear on a few things here. The opportunities remain for India as a country, and we'll continue to explore that as well.
So what is the code to crack the domestic market? Would you be looking at store expansion more? Would you be looking at perhaps going online more? Because the Indian textile retail market, it's not an easy market to crack. I mean, I know you have a leadership position there, but every time when India is growing, I'm hoping that you will get more and more news from you.
That's an interesting one, but I'll tell you one thing. We've seen, our journey I'll tell you myself, Nikunj, my journey from 2003 till now, it's a long one when I launched Spaces in 2003. But I can tell you, this is growing. We all know that the rural India was a little slow in the Q1, and Q2 also was a slight offtake. But as we go forward, it will start going up. But the urban and the modern India did well, and the premium segment did well. So I can say that in India, for me as well, Spaces is growing, and it is the highest selling brand in the modern retail. But now when I talk about the selling of my brand Wellspun and the MBOs, India is, let's face it, going to be a mom and pop dominant backdrop. And we now have around 15,500 stores. And there has been a little, flattish kind of a look, which we are anticipating to grow in the next, the festive season that's just right around the corner. But Nikunj, I definitely feel that the consumers are evolving, and we have seen a CAGR of around 30% here. And I think there is that positivity, and I feel very positive about the retail segment in India and the consumption too.
Dipali, for joining in and sharing with us your growth targets as well as the outlook on the business as a whole. So yes, cautioning that the concerns across the globe are concerning. The retail segment has seen a slowdown, but they are looking at urban demand picking up, and that has performed well. Cautiously optimistic when it comes to commodity prices. All right, just want to flag off what's going on in the markets that merits a mention at the current juncture. We're well sub the 19,000 mark at 18,935. The broader markets as well continue to feel the heat. Let's run you through some of the frontliners under pressure. Tech Mahindra, Bajaj Finserv, M&M, Coal India, UPL, Cipla, those are all the stocks under pressure. And there's literally two stocks that are holding out to the green, Axis Bank and ITC. Barring that, it's carnage across the board, with the broader markets as well seeing a cut. Names like BSE, Jindal Saw, Himadri Chemicals, SIS, Cochin Shipyard, Rail Vikas Nigam, they're all down and out in trade. Well, from one corporate voice to another then, in Astral Poly, they came out with an inline set of numbers, but let's understand what the outlook is when it comes to further growth projections for the India as well as their overseas business. We've got Hiranand Salvani, who's the ED and CFO at Astral Poly. Thank you so much for taking time out. Let's understand what really led to this healthy operational performance, a 62% rise in your EBITDA. Is it looking sustainable?
Yeah, I think the performance was excellent, mainly because of the demand scenario across the industry is excellent. So everyone is growing at a very rapid speed, and that demand is still continue. And secondly, there was the inventory losses in the last year. So that inventory losses are not that much in this quarter. So because of that base effect also, the growth was very high. And we are confident that this run rate will continue for the growth, because first half, if you see, we have grown 29% in volume. We have in fact given the guidance of 15% volume. So now we have increased our guidance also to minimum 20% plus growth. So we are confident that will continue.
Okay. So what is the outlook then with the decision to upwardly revise your volume guidance for FY24 to 20% plus? What is driving this optimism?
So basically, the inherent demand scenario is good in the industry. Secondly, we have started this our East plant last year, that has started contributing to us. Second plant of our East, that is Guwahati, just recently started in October. So these two new plant is also going to contribute. That's why we have revised our guidance.
What's been the impact of the correction in the average PVC prices by roughly around 13%? In the second quarter, how's that impacted your operations, your market positioning?
I think now the correction is almost done. From here on, the way global situation is panning out, we are expecting the polymer prices to go up from here on. And that is going to help the company to gain something in stock terms. So we feel that this is the bottom now. And from here on, it will be better only. Now, whatever the correction has happened in the first half of October, that may affect some loss into the inventory side. But that I think will not be that high, because we are expecting that the remaining 2 months, the prices may go up.
So how do you foresee the future dynamics of pricing for the industry? And what ways you think it's going to really trend given the uncertain times we're currently in?
So I think we have seen the worst time in COVID, from where the polymer price has shoot up from 60 rupee kg to 162 rupees kg. In this worst environment also, our company has delivered the excellent number. So I think we are used to work in these kind of volatile situation, and we are confident that in this situation also we will easily manage that.
Fair enough. Moving forward, I just wanted to get in a sense from you as well, because in what ways are you seeing, will the operational Guwahati plant and the upcoming Telangana project contribute to your overall production capacity, and in what way will it contribute to your market presence?
So I think Guwahati will going to contribute close to about 22,000 metric ton. Telangana project is going to be contributing 70,000 metric ton, but that will come in two phases. Next year, first phase will come around 40,000 kind of level, and then after next year another 30. And then one more plant we have planned, that is in UP, that is in Kanpur, that also going to contribute 50,000 metric ton, which will come in the last quarter of next year.
Capacity to your mind industry is adding, because even I speak to your peers now, they are talking about massive capacity expansion. You are expanding capacity. So given that the pipe business historically has been slightly volatile, won't there be a situation of excess capacity and low demand in 2 to 3 years?
No, Nikunj, if you see the growth, last 3 quarters, if you see the growth is fantastic. And the way shift is taking place from unorganized to organized side, that gives the confidence to us that we will be able to manage this growth trajectory. And for that, we need the capacity. If you see the commentary from any developer or the real estate trade, everyone is talking about the growth. And the way new schemes are getting announced at the pan-India level, that gives the confidence that demand scenario will going to be great in the coming time. Secondly, if you see the ready inventory of the units, that is reduced drastically for so many years low. So that also suggests that whether the future demand of ready unit may be there or not, but they have to do the construction. And the day they will do the construction, they need the pipe. So I think we are very confident that the demand scenario is going to be there in the coming few years.
Of your sales, you would say, are rural in nature, because when I speak to auto companies, car companies, two-wheelers, they're telling us that there is a slowdown in the retail category, rural category, I beg your pardon.
So I think there is no correlation between the auto sale on the pipe sale, because pipe is connected with the construction, and normally our stage of pipe comes after almost 18 months to 24 months after the announcement of the project. So whatever the pipeline projects are there, they have to complete, because about lack of pipe, they cannot stop the project. So I don't think there is a correlation between two. This side, I don't think you talk to any industry player, everyone is talking bullish. And talk to the even developer, they are also very, very bullish on this side.
The volatility in monsoon played any impact on the so-called, rural demand, agrarian business?
So see, rural demand affect us only to the extent of agriculture side of the pie, and our ratio from agriculture side is very minuscule. So even if the rural demand is not going to be there in a big way, then also our company is not going to affect, because our focus on agriculture pipe is very, very minuscule. We are more focused on the plumbing side of the business, and plumbing side we don't see any problem. Even you see the last quarter number, we have grown 28% in volume.
Okay, now the biggest moving part in your business is the polymer prices, something which you can't control, but something you can manage. So as you continue to expand capacity, what is the plan in place to ensure that the volatility of raw material is actually taken care of?
So I think the best part of the industry is that whenever there is a fluctuation in the polymer price, that is passed through very immediately. Normally, I have not heard that more than 1 week we have taken any time in the past to pass through to the market. So whatever the small hit will come, that will come on the inventory side, whatever we are holding. Then we are increasing our more dependency on the local polymer. So that volatility also we are trying to manage in a big way. And that is why you see that even if there is a fluctuation, we have delivered the good number. I told you that in the COVID period was the worst, where polymer price gone up by 150%. In spite of that, we have maintained our margin, because pass-through is very easy in industry.
3 years out, let's say this is October 2023, we are speaking to you in October 2026. What do you think we are likely to discuss? I mean, will it be capacity expansion? Will it be market share gain? Will it be more business coming from B2C, not B2C, not B2B?
I think it will be a combination of all. We have to increase the capacity. That is what exactly we are doing. We don't have any problem of the cash flow, so we are continuously increasing our capacity. At the same time, you see last 10 years, continuously Astral has gained the market share. Even in the difficult time also, we have always gained the market, and that run rate is continue. In this first half also, industry might have grown 10 to 15%, but our company has delivered 29% volume growth. So that market share gain will keep continuing in the coming time also.
Thank you for taking time out and joining in, Mr. Savlani, and giving us a view on the overall growth targets as well as metrics. On that note, then, we'll take a very short break and be right back. Lots more lined up.